All right, for an inside look at the ICO boom, let's bring in Andy Bromberg. He's the CEO of Coinlist, a platform that actually helps token creators with the ICO process while also weeding out potential scams. Andy, great to have you with us. I would imagine that there's a lot of prospectuses or plans coming across your desk for ICOs. Do you have to reject a lot? Do you weed out a lot of them? What's the hit rate?
Absolutely. The hit rate is very low in this industry. Coinlist has publicly had on our site only 3 ICOs out of more than 900 inbound applications. So we say certainly the vast majority of these ICOs are really low quality or scams or frauds, and would echo those comments that you have to be incredibly careful. I think what's important here is doing that diligence and figuring out how you can diligence these ICOs. They are incredibly risky early stage investments, but it's not like you're going to Vegas and gambling your money away. There are things you can do to determine which ones are high quality and which ones aren't. And that's a lot of what we do over here at Coinlist in order to determine which ICOs we want to work with.
So in terms of, Brian Kelly here was talking about how some companies were raising the money, and then after that, they weren't really incented to grow their business or actually do anything with the money besides just having the money and maybe spending the money. That seems like just a straight out scam. How do you determine whether or not a company is actually incented to do something? Because if a company is raising the money on the premise of doing something for the business, that seems more akin to being a security, a la Securities and Exchange Commission, versus just an ICO or a fundraising device.
Yeah, that's absolutely right. And in fact, SEC Chairman Jay Clayton has said that he has yet to see an ICO that's not a sale of securities. And that doesn't mean that the tokens in the long term won't be securities. But certainly at the beginning, these are sales of securities. They're sales to finance the early building of a company. And so when we look at it a lot like an early stage investment in any company, looking at the team, deciding if they have integrity, if they have a high quality technical team, if they've built real product in the past. And that's where you start. Once you get past that, then you can look at the details of the ICO, how the sale is structured, what the token economic model looks like. But at the beginning, you have to do the same team evaluation you would for any startup or any company you're investing in. And that's really what helps you determine if the sale is going to finance a company that will actually build something meaningful, or if they're just raising money for the sake of raising money and then going to run away with it.
But embedded in investing in an ICO is a belief that the token itself will actually have value and retain value after the money is raised. So on Coinlist, of the ICOs that you have listed, how have the coins done in the aftermarket?
So actually, of the coins that we have worked with publicly at Coinlist, none of them are trading yet. And I think this is a really important consideration. They're all still working towards building their live tokens and launching their networks. And building these networks and having them actually accrue value is a long process. It is hard technology that you have to build. So we work with companies that want to sell these, finance the building of something really meaningful, and then launch it, not trying to make a quick buck, getting that initial pop, as someone just said, and then selling quickly. So of the ones we've worked with publicly, Filecoin, Blockstack, and Props, they all sold securities, and now they're off building, and soon they will launch their tokens on various timelines, and then build value into those tokens and see those tokens increase in value, hopefully. But certainly we're not looking for the ones that are just looking for that initial pop and then trying to get out of the market with the money that they've made.
Hey, Andy, it's BK. I'm curious, Twitter has said they're not going to do cryptocurrency ads. I think Facebook, everybody else is banning those. Does that help or hurt your business?
It doesn't really have a huge impact on Coinlist business for the sales that we work with. I will say I actually think it's a really smart move by those companies because, as we're saying, evaluating these sales is really hard, requires a great deal of expertise, and that's expertise that very few people have because this ICO industry is so new. So if I were Twitter, Facebook, Google, these companies that are banning, even Snapchat, banning ICO ads, I'd be looking at it and saying, listen, I don't know how to evaluate these yet. We don't have the expertise internally. Let's take a breather here, take a minute, figure out how this industry is going to work, and then come back at it once we have that expertise internally. But I'd rather have no ads on there than ads for scams and frauds alongside legitimate companies. So I think it's actually a good move for the industry and a good move for those companies.
What was Tezos in your view, and what sort of lesson was that for the ICO community? I mean, the notion that the foundation would be in charge of the money and that the co-founders were in charge of the source code, that seems like a really bad a really bad setup, especially for the people who are investing in the ICO. So how has that changed the ICO game in terms of management and governance?
Well, yeah, what we have to remember here is that the ICO industry is so young, really less than a year old, at least in its popular form. And so we're still figuring out what these structures should look like. Should it be foundation structures? Should it be corporate structures? Who should have control over these distributed networks? And these are really hard questions. If we thought back to venture capital in the 1940s when it got started, we did not have all the structures and incentives worked out properly. What we're excited about is teams like Blockstack, who we worked with, building in incentives in their product, in their fund, in order to make it so that they have incentives to build it out, governance structures around what they're building, And I think a lot of the early ICOs that happened in the first half or even up to the third quarter of 2017 didn't know exactly what they were doing structure-wise. They were guinea pigs and experimenting with some early structures. And we're going to see a lot of innovation and a lot more tight governance controls in the year 2018 and beyond.
I'm just curious, Andy, how often do you talk to the regulators these days? Is this like a daily occurrence? Do you guys have a team in Washington?
We certainly have a constant dialogue with the regulators. And the piece that's so important here is that regulation is coming. And the regulators have been very reasonable so far. They took their time to understand the space. And they came out and said, we think existing regulations should apply to this. We just need to figure out exactly how. And so having those conversations with regulators, helping them understand the nitty-gritty of the industry and understand how things are working and what these new norms are going to be around sales structures, around governance structures, is something that we at Coinlist are spending a lot of time doing. And we're seeing the best people in the industry doing the exact same thing, taking that time to speak with the regulators and make sure that things come out correctly.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.